What's going on, guys? I want to show you guys a setup that doesn't present itself every single day, but if you're able to catch it, it can provide a very, very quick and fast, easy trade, resulting in a nice one and done trade for the day. And what I want you guys to focus on right now for this next 30 seconds is the left-hand side of the chart. That's the New York pre-market. That's the London session price action. Look at what's going on this side of the chart. Not a whole lot of action there. And one thing that is particularly standing out to me is this low. Okay, this low right here. You can see we kind of dipped down, we bounced a little bit, we put in this double bottom, we started to bounce going into the New York Open. Now, the average trader, the newer trader, if they're looking at this price action pre-market, they're 100% ready to go long. And they might actually make the mistake where off the open, the market pulls back just a slight, and then they try to bounce it, right? And then they ended up getting crushed. So what I like to look at here is, and I kind of made this note inside of Evolution Traders in the Discord community. It doesn't take long. It's just one sentence. Guys, we're looking at the previous hour low on the NQ futures. We are looking at XYZ specific price. So we are looking at 23,230. If that gets confirmed off the open, and what I mean by confirmed is the active candle that is printing starts to confirm the low of that candle, which is 23,230. That's what I mean by confirming. If 23,230 is your pivot, that's the level. We are looking for a breakdown of that level. So when that candle is actively printing and the price action sweeps below that, we want to jump in that trade. I call it the opening drive trade. They don't happen every day. Sometimes you get an opening drive trade where it wicks you in and then shoots up against you 20, 30 points, right? Those are kind of hard to manage. Today provided a fantastic opportunity because the market absolutely washed out off the open here. And let's give you some other reasons as to this setup was a little bit more legitimate to me to want to take. I have a linear regression channel. So the linear regression channel 50 is an average price of the previous 50 channels, and then it's blocked off by a standard deviation of 0.5. So you see an upper deviation here and a lower deviation down here, and it's kind of, or excuse me, up here, here, and here. So when you start to look at these linear regression channels, you can look at them as an area of supply or demand, okay? And supply or demand is just another word for resistance and support. Resistance and support is just another word for potential buyers, potential sellers. So I'm looking at that level as an area of potential support. But what happens when support is broken? What happens if you're standing on a bridge and in the middle of the bridge, some of the planks start to break on a wooden bridge? Your bridge is going to collapse. So that's how I assess supply and demand. I just make it very grade school. I make it very elementary and try to make it as dumbed down as possible for myself so I don't have a lot of confusion. I don't need to know what the market is doing and what's the volume profile and where is this and where is that and all these big fancy words and where's everything sitting on the tape. A lot of traders, especially nowadays, they try to talk in a way where, as if they're some scientist, right? And is there a science to the market? Maybe so, maybe not, right? And the way that I think about it is, if there was an exact science to figuring out this market, then wouldn't there be multi-millionaires times multi-million people, right? But when you ask the majority of people who do this, especially people in the prop firm space, most people are struggling and they're failing because, in my opinion, I think they're just making things way too complicated. Now, you can definitely be complicated when it comes to your trading and have a specific set of rules and parameters that you're trying to follow. But don't try to be smarter than the market. Don't try to put fancy, taglines on specific ways to trade. If I say that there's an area of demand and if it broken, we have a potential short, there doesn't need to be any further explanation, right? Like for me, I don't need another reason as to why I should take that short. This was a previous area that it held as support. It was broken in the pre-market. So by golly, if price action confirms that break, right? If the imagine the bridge got broken here. So one plank, two planks fell off the bridge. And now there's a big old boulder coming down the bridge. If it hits those two broken planks, well, it's obviously weak in that area. And if the boulder gets to that weak point, there's a high potential probability that there might be an absolute collapse. Now, could the boulder get lucky and maybe shift to the side and roll over the side of the broken plank? Sure. And sometimes that happens where you see price action start to consolidate and wick around, and then maybe it puts in another slight low, but then followed by a very aggressive bounce. That's because that boulder made it through that bridge without collapsing it. But in this particular case, if there's an area of support that's broken, I want to be a part of that. And because this is also another area of interest for me, the linear regression channel, and because based on the way that I set my charts up, I didn't have any next support all the way down until 23,131, which is my daily 10 SMA. We were also below the daily 5, and we were also below the 20 SMA on this 5-minute time frame. So I had a lot of things that were matching up, not just telling myself, oh, well, if price action loses this pre-market low, I'm going to go short with no rhyme or reason, right? No, the rhyme and the reason was we were at support at a linear regression, okay? So that's one reason why. If we lose that support, well, maybe there's a potential to trade down to the next area of support. That's reason one. Reason two, we're trading below the 20 SMA in that point in time. So that's telling me that short-term price action on this 5-minute time frame is a little bit more slightly bearish than it is bullish. We are also got rejected at this daily 5, and we're also rejected under the pre-market highs. All things that are signifying to me that price action is more weak off the open than it was strong. So as soon as we start to confirm this low, I jump in, and I jump in with 5 contracts. And as the price action starts to speed up, I quickly add into that another 5 contracts, getting this up to essentially a mini contract and riding this down for about 13 to 14 points. Now, to me, I'm not looking to capture 40, 50, 60 point moves. If I can capture 10 points, 12 points, 15 points, 5 points, those are sufficient enough trades for me. I'm not an overly greedy person. I understand that the market's going to give me a million setups each and every single month. It's going to give me another setup tomorrow and another setup after that and another setup after that. My job as a trader is to remain consistent, remain focused, and just try to repeat the same process with the same setups that I take each and every single day. Now, where would my stop be in this particular situation? Well, if I'm going to get in on the confirmation when price action is printing below this price, right here, and let's say it wicks me in and then it starts to bounce and it starts to go against me and it starts to go against me in this big red candle, and price actually gets back over that area that I was looking at as a focal point, which was that linear regression channel 50, and it starts to close over that level, I've got to take the loss and take it on the chin like a big boy, like an adult, and understand that this game there is no guarantees, but I am trying to manage my risk as best as possible. That's how I would essentially play that position on a potential stop loss. Now, there's other ways you can use stop losses. So say, for example, you want to risk no more than $250 in a trade. Well, you're going to jump into this trade here, and if price action starts to bounce against you and it gets you down $250, then you just close the position and tell yourself, there's no reason as to why I got stopped out. That's just the name of the game, and this game is built on a game of probabilities. But over the long haul, over the series of trades, those probabilities are going to play out in my favor because I've back tested enough of this and I've forward tested enough of these potential setups to know that XYZ strategy operates at a 68% win rate over the long haul. I'm going to make more winning trades than I'm going to have losing trades, and I'm going to keep my losses as small as possible by managing how much I'm willing to risk per trade. Now, for me, I believe in managing risk not in terms of points, but in terms of dollars. So if I'm willing to risk $250 a trade, but let's say I know that there's a potential pullback that could potentially stop me out for 30 or 40 points, well, I'm not going to go put on one mini contract because I'm not going to be able to afford that risk. But if I was to trade, let's say, 2 micros or 3 micros, then now I can afford to take that trade. I can afford to take that risk. And yes, maybe the profit is going to be a little bit smaller than if you were trading something like one mini contract, but the losses are going to be much more manageable, and you're going to be able to stay and remain focused and continue to stay in this business. If you guys want to try these opening drive setups where you're identifying a specific level that is matching up with other confluences and taking that momentum off the open on those breakdowns or breakouts, Apex is offering 80% off. This is the last day for their 80% off sale. You guys can use code DAnthony. If you guys want to join Evolution Traders, the link is down in the description box below. We trade a lot of these setups each and every single day. I've got a lot of educational content that is not on YouTube there, some video lessons, some training lessons, some active mindset and psychology and risk management lessons, as well as I offer a course that you guys get completely for free once you guys join Evolution Traders. I will see everyone on the next video. Make sure to give me a thumbs up, and I'll catch you guys all in the next one.